please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The rupee is now joining the rank of currencies that are not falling and are in fact recovering a wee bit. But on the other hand, we have Asian stock markets which are still not responding.
Rupee has breached the 72 mark for the first time.
Today's movement is something which is, is a continuing, pessimistic view.
Market's down again, and I think it's got to do with what's happening with the currency.
Paper stocks continue to be on a tear, whether it's JK paper, West Coast, international paper, doesn't matter what you're looking at, Star paper.
Rupee breaches 72 mark for the first time ever against the dollar as it weakens for the 7th straight session. Bond yields trade in a narrow range vary of the rupee movement.
The Sensex snaps a 6-day losing streak, gains over 200 points. The Nifty reclaims 11,500, adding over 60 points today.
Pharma index is the top gainer, hitting its highest level in 52 weeks. Oro Pharma rises almost 9% after a $900 million deal to acquire dermatology and oral solid business of Sandoz in the US. Sun Pharma also touches its 52-week high.
Z Entertainment recovers from the lows after the management tells cnbc TV 18 that they are not worried about growth in television consumption at all. They confirm that margins will stay above the 30% mark despite investments in digital platforms, Z5, etc. for example. Meanwhile, the Hoodco stock surges more than 7% after posting strong earnings. Reliance Home Finance also gains on reports of fundraising talks with the Abu Dhabi Investment Fund.
Those were the top headlines from the street. Hello and welcome to Markets Today Rupee Special. The currency crisis just refuses to abate. Is the rupee fall any more due to fundamentals, or has it now become a victim of fear? We will get to the lowdown on these questions. I'm Lata Venkatesh. With me, my colleague Prashant Nair.
Lata, hi. I mean, the stock market picked up, and I guess both the currency and the Nifty fates are intertwined in that sense. We will, of course, talk about both of them. The rupee, remember, fell to a fresh record low against the dollar, crossing the 72 mark for the first time ever. It's lost nearly 3% in the last 1 week itself. To discuss the currency and its impact on the economy and its future, of course, we are joined by A. Prasanna, Chief Economist at ICICI Securities, Anant Narayan, Professor at SP Jain Institute of Management and Research. Gentlemen, thanks very much, both of you, for being with us here on the show. But before we come to the both of you, let's quickly wrap up what really happened in terms of the currency, in terms of the rupee. Lata, I mean, weakness here, even as some of the other emerging market currencies picked up today.
Yeah, today, that's how it looked like in the morning, that other emerging market currencies are not falling. But actually, even they were in jagged territory. At one point in time, the Filipino peso was holding up when we were falling. And thereafter, the peso also fell. And then again, it recovered. So, it's a little difficult to say. Today, what was working for the emerging market currencies is that the dollar index did not rise too much. It was closer to 95 rather than to 95.3 or 4 that it was yesterday and day before. So to that extent, there were no fresh impulses to weaken these currencies. But the buying of dollars in India continued unabated. It was only the Reserve Bank which supplied, looks like, well over $1 billion today, determinedly not allowing the dollar to become more expensive than 72. So it was the Reserve Bank push, other than the fact, of course, that the dollar also was slightly weak, and the crude oil prices also obliged by staying around 77. Now, we spoke to a huge number of experts. The world seems to be divided in two camps. One camp which believes that the dollar is going to rally because the US is the strongest economy and is growing stronger and stronger, and the strength of the dollar will continue to keep emerging market currencies somewhat weak. And the other camp which believes that the dollar strength is kind of limited, that it might start weakening because trade wars and other issues will keep the rest of the world weak, and therefore inflation will not climb. The Fed will not have reason to hike too much. So that seems to be the two camps at this point in time. But let's find out from our guests what they make of the rupee's value itself. First, let me come to you, Prasanna. What is your sense? Have you all made any calculations in terms of RER? Do you think the rupee has fallen enough? And can you call it not too overvalued now?
I mean, of course, compared to recent levels, it's not too overvalued. But if you're again talking in terms of long-term averages, and again, this is something I maintain, if it overshoots above an average, it has to undershoot below the average also. Then only it's a meaningful correction. So from that point of view, again, looking at the RBI's 36 currency index, probably the correction is not enough. I mean, if you purely go by that metric, but of course then some people will question whether RER itself is the correct metric. Sure. But if I use the BIS RER, which is again a slightly different construction, there it seems like whatever calculations we have made, we are more or less at the long period average on that metric at least.
Okay, sorry, on the BIS RER, what is the indication?
So it's close to the long-term average. Okay. I mean, the long-term average there is around 95.
So it's fallen enough.
Yeah, that's right.
Okay. Now, therefore, what would you say would be the impact on yields? Are we now kind of fairly valued in yields as well? Today the market moved in a narrow range, but it's been dilly-dallying between 804 and 8.12 if you looked at this week. What's the sense? Further weakness in bonds?
I mean, if you ask in terms of a slightly longer time frame, I do think the yields can go higher. But yes, I mean, since the rise in recent weeks has been pretty sharp, probably in the near term, market could consolidate around 8%. But the issue is, I think, for Indian bonds, the concern is not just about inflation. Of course, the recent rupee depreciation does play a role. I think the issue is about fiscal policy, I mean the fiscal deficit, as well as the fact that I think the market has consistently been underestimating rate hikes by RBI and the extent of supply of long bonds, and also it's been perhaps overestimating RBI support via OMOs. So I think these expectations have to be realigned, and I think we are going through that process now.
Okay. Well, then quickly, let me ask you the final question. What would you watch out for this month itself? Because there is the possibility of an OMO around advanced tax time, mid-September, and, of course, the calendar. So, I mean, what is, if you have to make a forecast for September itself, what would it be, Prasanna?
So first of all, I think OMO is a non-event. So again, this is a running theme. People do confuse what is the purpose of OMO. It can perhaps cap the rise in yields. It cannot lead to a fall in yields on its own, right? So let us leave that aside. So I think obviously, like you said, the calendar is important. Now, when the first half calendar was announced, it was indicated that probably there is a reduction of 50,000 crores from the gross borrowing number put out in the budget. But again, that was just a comment made. There is no kind of a fresh borrowing number or estimate which has been issued. So obviously, we have to wait and see if the government follows through with its promise which it made at the time of the first half calendar. Okay. The other thing, of course, is broadly, I think for globally, I think FOMC meeting is there. We do know a rate hike is coming, but what we are interested in knowing is what is the statement, what happens in the press conference, whether Fed is hinting at a pause sometime next year. I think those will have huge implications for currency markets and therefore for our policy and interest rates.
Oh, God, that's a bunch of events to watch out for. Our central bank, US central bank, and of course, borrowing calendar. Thank you very much, Prasanna, for joining us. Anant, first to you on the rupee. Prasanna was just telling us that if you go by not the RER, but the BIS RER, which is a slightly different construct, the rupee perhaps is reached its long-term average valuation. If that is the case, would you say that we will find some stability around 72? And especially going by the way in which the Reserve Bank has supported that number today.
Well, from an RBI intervention perspective, I think that is a relevant number to look at. RBI might be wanting to see rupee depreciation to a level where it believes the external balance becomes a lot more sustainable. But, you know, RER is a long-term, medium-term kind of a metric. We can't calibrate daily movements to RER. I guess what is more relevant is, do we see the core balance improving at current levels of dollar rupee? Which means, you know, what is the fundamental reason behind why rupee depreciated the way it is, besides the external triggers? The fact is our current account deficit grew rapidly from $15 billion in FY17 to 49 in FY18, and now people are saying $80 to $90 billion in FY19. Against that, our FDI, unfortunately, has been coming down as well, net FDI, which was low to $30 billion in FY18. So we are looking at a core imbalance of about $40 to $45 billion. And that imbalance, as long as it exists, and as long as we are trying to cover that by borrowing short-term or fickle dollars, there is an unsustainable balance in the background. So the question really is, at what level of dollar rupee do we really see that balance becoming a lot more manageable? Now, unfortunately, I don't think dollar rupee alone will help us bring that balance in the short run. It will help us in, over months, and these things take time to impact exports and imports. But alongside clearly some basic issues relating to our trade, whether it's manufacturing, whether it's exports, whether it's our thirst for smartphones, all of these have to be addressed alongside. I do think at current levels, given that we've already seen 10% depreciation of the rupee, we have the basic ingredients for us to improve our current account balance. But it does require a lot of addressing of issues on the export and manufacturing side.
Anant, would you imagine that for now, I mean, all the factors that you listed are extremely relevant, but for now, this run on the currency, if I can call it that, is behind us? The worst of this is behind us.
You lost your voice in between.
Can you hear me, Anand?
As I think yeah. Is the RBI stance. The short run, RBI has
Okay. Okay. Well, Anant, we are not able to hear you. We'll do one thing. We'll just play a couple of comments we got on the dollar's trajectory. We spoke with, CNBC spoke with Ruchir Sharma of Morgan Stanley, and a little while ago we also spoke with Adam Cole of the Royal Bank of Canada. Two contrary views on how the dollar will perform. We'll come back with Anant Narayan in a minute.
At some point in time, these valuations need to matter, especially on the currency front. The Mexican currency, the South African currency, these currencies, even the Turkish currency, are not getting to extremely cheap levels. In general, the dollar is very expensive. And so if I were to look out to the next 3 to 5 years, I think the dollar will be weaker, not stronger, in the next 3 to 5 years.
The consensus view now is still that the dollar will generally fall in the remainder of this year and then into next year. And we don't agree with that. We think that we're not rampant dollar bulls, but generally we have a bias towards the dollar trading better going forwards on a fairly conventional story of the Fed continuing to normalize policy when the rest of the world is doing relatively little. And that FX markets are quite a conventional story at the moment, and so long as that's the case, then the dollar can continue to grind higher, and that's what we expect, which again will be a relatively unhelpful background for emerging markets.
All right, we are unable to connect with Anant. Let's thank Prasanna on that note. Well, the key takeaway is that the bond market is going to face some pressures which are more domestic, but the currency will still remain a victim of how the dollar goes. And there are some important events to watch out for, especially the September 26 Federal Reserve meeting. What signs emanates from that meeting in terms of the trajectory of rate hikes. With that, we are going to take a break. But stay tuned. We will come back and discuss the equity markets. Very, very interesting, because today they seem to breach the umbilical cord with the currency. We now shift our focus to the stock markets. While for the past week, stocks have been falling with the rupee, today, after volatility in the first half dictated by the rupee, the stock indices stabilized and then climbed. So have we put in a near-term bottom in the stock markets, or is this a very temporary respite? To discuss that, we have with us market expert Anand Tandon and technical expert Mitesh Thakkar. Anand and Mitesh, thank you very much for joining us. Mitesh, first up, the technical view. Has the Nifty put a bottom at 11,400?
I think I've been advocating as much that since yesterday that 11,400, at least one leg of the decline is over, and we might have had a temporary bottom. So I would not say that there are signs of reversal as yet, but I think it's hit a very important support around the 11,400 mark, and we saw a good bounce back yesterday towards the close, and today there was some follow-up. On the upside, the immediate intraday averages come in at about 11,560-580 zone. So if that is not being crossed, expect a very choppy 4-5 sessions ahead between 11,560-580 on the upside to roughly about 11,400 on the downside.
Anand, what is your sense? Have we, although we only had, what, 2 or 3 days of correction, a little over 240 odd points or so on the Nifty, do you think with today's bounce we've put that behind us, or too early to say that?
I think, I wouldn't be very in a hurry to say that from here we can go back and resume. Obviously, the macro has reached a stage where, it's a kind of tipping point and the market has begun to recognize some of the risks. That said, maybe what the market is signaling is that the rupee fall that we have seen, which has been rather abrupt to say the least, is perhaps over, and that RBI's intervention may actually put a stop to it. And to that extent, the near term at least, there could be a small rebound on account of the rupee being more stable. But, the fact remains that we are still overpriced, and the world has, economics have deteriorated very significantly. And that has to reflect in the prices at some stage.
Okay, so Anand, does that mean you're not bringing out your shopping list just yet? Or are you finding value in, say, some of the export-oriented stocks, the dollar weakness beneficiaries?
Clearly, IT and pharma have rallied quite a lot, and I would expect that at least pharma may continue to rally, because if you look at the relative valuation, there is still some space to go. So IT, perhaps some of the gains may have been hedged away, but even that, with the improving situation in the US, will also probably benefit. There is another section where, if you're looking at import from China, etc., to some extent, that could also be protected now. So there are sectors that you may want to play, but you have to keep in mind that if there is a real fall-off in the global markets, then obviously everything will fall. But, we've been waiting for a correction of a meaningful size for quite a while, and it hasn't come. So with an asset allocation which is somewhat less inclined towards equity, within the equity portfolio, obviously you can continue to remain looking at those sectors which are somewhat less affected by the immediate volatility.
Mitesh, just a couple of names. One is Reliance Industries, which had corrected about 10% over the last 5 trading sessions or so. It saw a little bit of an up move, 3% higher. It's got a large say on the Nifty, the largest actually. How is this one looking?
See, here I think, the rally last started at about levels of 1,000 and then has went on till levels of around 1325. I think that rally is taking a breather, but the correction seems to be over around the yesterday's low. So around 1208, 1205, strong support exists, and I think the stock might just do a range of about 1300 to about 1200 for the next few days. Eventually, I expect the stock to again break on the upside and resume its uptrend. Okay.
Anand, I wanted your view on pharma stocks. They quite clearly are the flavor of the season, as it were. Is it still good to buy? Some of them, like Sun, are at 52-week highs, which is not saying much because they've fallen so much. Oro Pharma, of course, is in a league of its own. Anything that you would buy?
So Oro Pharma, in spite of the rally, is probably still trading at about 16, 17 times at best, probably lower. So, given where the rest of the market is, I think there is enough headroom for companies like that to do well. I would argue that, any of the frontline companies at this stage, Reddy's, Sun Pharma, Cadila, not so much Cadila perhaps, but Oro, are actually very well positioned in terms of both the fact that their export portfolios will obviously benefit and the fact that the valuations are nowhere close to either their own peak or where the market is.
Okay.
Mitesh, 2 other names. One is Z Entertainment and Sun TV. They've seen large corrections. How are they looking?
Prashant, I don't think, we've seen some kind of a bottoming formation over here. While, yes, both of them have declined, both of them are also oversold, and Z did attempt a good rally from the lower levels. I think around 480, 490 levels, you will see the rally possibly peter out, and a retest of 435, 440 levels could happen. Sun, somehow it still looks weak to me. I think there's some more downside left in the stock price. We had seen the stock hit levels of around 650 in August 17, and I think those levels should be revisited.
Okay. Anand, rupee depreciation beneficiaries, as you pointed out, it's not just the export-oriented sectors. Even those who compete with imported goods will have an advantage. And then there are exporters like Bajaj Auto as well. So if you cast your net wide and looked at rupee depreciated, what, over 10% this year, year to date. Where would the earnings gains come?
Well, you already pointed out a few. You also have some of the metals, for example, especially steel, which is a beneficiary of the fact that we have protection around it. Tires is another space where we have protection. There are a whole set of sectors. I think the tiles businesses will do reasonably well this year. Paper is already doing well, not necessarily because of what's happening because of the rupee, but generally because of the fact that there is some consolidation going on in the industry. So I think many of the soft commodities are doing quite well, along with metal, cement, and the export-oriented companies. The fine chemicals and chemicals also are a clear beneficiary, and have been for a while. The question is that which of these are somewhat relatively cheap, because there is no doubt that the overall broad economy seems like it is looking up. Of course, we now have to adjust for any impact because of the macro. But broadly, the earnings are beginning to show up, and therefore there is a wide set of companies which will do well. The question is to look for those where the valuation already doesn't reflect the growth and the future already.
Okay. And anything in the finance space at all, Anand?
Well, I think obviously the corporate-facing banks are the one that one would bet on. The others are continuing to do well, but I don't know whether there is any great value left in them. Private sector banks, from a strategic point of view, you continue to remain bullish, but the valuations are already factoring that in. So, in the near term, I think the delta is more likely to be on the corporate-facing banks.
Okay. And Mitesh, final thoughts from you? Any positional buys or sells for that matter?
A lot of positional buys. I think the pharma sector still remains a firm favorite to buy into. I think we had Aurobindo doing very well, but I think stocks like Sun will head towards 730, 750 soon. Stocks like Axis Bank and ICICI Bank, after a bit of correction, would be an excellent buying opportunity. Anything close to about 620, 630 range of Axis would be good to buy, and I would look at 700 plus targets. Similarly, ICICI Bank around 320, 325 would be good levels to buy, and 360, and then 390 is the next target.
Right. So both the stock doctors are prescribing pharmaceuticals and, of course, a few finance stocks and export stocks as well. Thank you very much, Mitesh and Anand, for joining us.